All right, Doug, let's just start off with Continental now being private. You're not constrained by the public market. Does that mean you're just going to go pump everything there is to pump at Continental?
That's a great question, Alex. It's a great thing being a private company. No, it does not mean that.
Okay.
We are investing at a very prudent level, consistent with our cash flows. Just to go and invest and be producing as much as we can is not how we generate the greatest value for. We still have owners, we still have shareholders. We're interested in investing at a pace which creates the greatest amount of value. Being free from a lot of the public market constraints gives us the ability to think about value and how do we grow value for the long term.
So at $100, do we think we get to $100 oil? And does that change how Doug looks at things?
I think we absolutely will. I think we're going to continue to see volatility in the $80 to $100 oil price environment right now. But I think the higher price is a reality that we're going to have to deal with as we think about our investments and we think about the energy needs of the globe. And the fact that we know today that it's being more broadly recognized that oil and gas is going to play a key role in our sources of energy in that energy stack over time as projected.
So help me understand then. So the idea is that you guys want policy to be supportive of oil and gas because we need it in the energy transition. But then you're still going to be capital disciplined and do things in a smart way. So what gives? Like, what's the problem then? If production's almost near a record high and you're still producing a bunch near records in the Bakken, what's the problem?
So the key today is I don't think that there's a broad enough recognition that this is a depleting resource. We still have a very strong need for oil and gas to power the energy needs of the entire globe. And we know by all the projections, whether they be government or whether they be by industry or research associations, that oil and gas is going to play a significant role, greater than 50% oil and gas specifically, all the way through 2050 and beyond. The problem we have, and what we need to be most concerned about, and we don't get enough attention on, is there's been a fundamental lack of investment in the last 10 years in exploration. And so when you talk about mobilizing resources and bringing more oil and gas to production, we're fairly balanced today, and that's good. The market's fairly balanced. But what we're not doing in a depleting resource is investing enough in exploration for future energy needs.
So what I'm hearing from you is that it's not so much you need permission to drill, you need permission to explore. That, like, because productivity has become a problem in U.S. shale, you're not going to keep getting more and more out of the asset. You have to keep pumping just to keep production flat. Is that a fair assessment?
It is a fair assessment, but being able to have the permits to drill for exploration are very, very important in the United States onshore in the shale areas.
For federal lands, which is where that's been an issue before. But you guys are the tech guys. I mean, you're pioneers. You're like the shale cowboys, you know? Like, you have your cowboy hat and you do cool tech stuff that gets more oil out of rock. Is that underselling your ability to keep doing that?
No, not at all. We will continue to innovate and improve in using technology. The horizontal drilling, as you know well and have heard so much about here recently with Harold's book and Game Changer, you know, the industry's made huge advances there. We're also seeing now where the average lateral length in horizontal shales has been 2 miles. Now we're going to 3 and looking at 4. So those are things that are going to continue to provide an opportunity for good investment and good production. But the key is that there's been underinvestment in exploration. And if we don't start thinking more about exploration and that investment here in the U.S. and globally, this depleting resource is going to be a challenge and will result in higher prices.
So let's go to the laterals for a second. So for non-oil nerds who are listening, it just means like how long you're going to drill this way underground. 3 to 4 miles, that's a long way. There's like a lot of technical risk that can happen with that. Like, you mess up one thing, it's huge.
Yeah.
I mean, is the risk really worth the reward on that?
It is, because what it's doing is it's enabling us to access additional rock that we can actually stimulate and produce. So instead of, you know, we're vertically developing in most of the oil and gas plays in the U.S. reservoirs that range from 10 to, call it 14,000 feet, just on average. And then we'll actually turn and go horizontally another 2 miles, and now looking to extend that.
Which also brings me to cost. That's got to be really expensive. Like, that's more horsepower, that's more casing for your tubing and all that kind of stuff. What's expensive right now for you guys? Like, what's going to be sticky costs for Doug Lawler?
So we obviously have seen increases in costs associated with inflation, services, labor, but we also, the steel, water, sand, all the kind of raw elements that go into our drilling and development programs have been higher, and it's going to be a constant challenge. And when you think about these costs, it is not expensive or not inexpensive to bring energy to market, and significant risk, as you described, is taken.
And how much of that's sticky?
I think that it's all fairly sticky when you say, the kind of term sticky. I mean, do we see opportunities with technology to continue to improve our costs? But a lot of what's taken place here in the past few years, we're seeing it to be a little bit more resistant than what we would have liked, and being able to claw back some of those inflationary gains that we were recognizing.
So, okay, if you're here, you're going to make a pitch for we need clearer, more consistent policy to be able to explore, to get the oil, so we don't have volatile prices of between 80 and 100 plus. What is that policy? What about the people who are going to say, yeah, but then you're just going to pollute the environment, like you're not going to help us? Does that mean you have to go full on in carbon management then to kind of sell that story?
Well, the oil and gas industry has made tremendous progress with respect to Scope 1, Scope 2, and pushing to Scope 3. We're also doing things here in the near term, looking for how we can help other industries, how we can do things in the agriculture space, in the retail space. We are going to continue to make improvements there, and it's just not fully recognized what oil and gas is doing for our total energy needs of the United States, and how we're working so hard to improve the environment. Natural gas, calling a bridge fuel, a transition fuel, has made a huge difference in reducing the carbon and the reliance on coal in the United States. It has to continue globally.
For the IRA, Inflation Reduction Act, what do you like in that? What do you hate in that?
I dislike anything that discourages continued investment.
But does it do that?
Well, it doesn't. There isn't anything in there that's helping to incentivize our continued development. And just again, as I had highlighted, the fact that we are not recognizing that energy, our sources of energy, are going to include oil and gas for the long term. We need to be investing more in exploration. This depleting resource is critical and it's essential to our everyday life.
If we don't hear your message, if the politicians don't hear your message, what happens to the oil price? Like, are we going to 150 again? Like, what is going to happen?
Instead of seeing $80 to $100, you're going to see 120 to 150.
Ooh, okay, so back to 2008, that kind of scenario.
Well, it's going to be, it ties back to, as we have been talking about, the Permian Basin has been a tremendous growth basin for the oil and gas business here domestically, but also a great impact globally because of that supply that's been mobilized there. The Eagle Ford, the Bakken, other strong oil-producing shale basins in the United States, they've reached their peak. The Permian Basin will reach its peak also, and when that happens, that's going to send a shock through the system that the United States can no longer grow a major basin. And when that happens, without encouragement and good policy towards energy investment, the opportunity and where companies will invest in exploration, you're going to see more pressure on price.